Good evening, friends. Welcome to my channel, Nifty Trading in Setup and Rules. Friends, the earlier day what I had mentioned is that at every level, I shall try to take a put. So when the market came down, I did not take a put because it's already come down substantial. I do not know where I'm going to keep my stop loss, so I waited. The market crossed the first resistance line. It crossed 7619. It crossed 7645. I still waited. I waited for retracement to happen. Then at 11:37, I took a put, and then I waited again. At this point, I was in good profits. But friends, I have a very simple philosophy, and the philosophy is that either SL or target. My SL was 30 points, and my target was up to at least 60-70 points. Friends, I waited from here, from 11:37 all the way down here, and finally, when the market did not give me my profits at the candle before the last candle, I exited. And I've committed to you that I'll show my P&L. So friends, as I said, I entered 11:37 at 194 and exited at 322 at 174. What was my net position? My net position today was a loss of 1,39,000 rupees. I'm fine with that because this is not even 50% of my earlier day profits. So bygones are bygones. Today the market did not give me anything. I'm okay with it. I respect the market. She did not want to give me anything. I'm fine with it. I took my SL. My SL did not got hit, but I took my loss and finally came out of the market. Now, friends, let's see the market in a little bit different way. So, friends, I keep on plotting the movement of the market up and down, up and down, up and down. Now, friends, my Guruji had said a level of 17,426. And from the time that he had said that level, it kept on banging in my mind as to why did he say that level. So my Guruji has a very peculiar habit. He will say 90%, but he will hide 10%. Now that within that 10%, you have a 90% in that. And he is an amazing guy. His channel is there in my link. Please join if you want to learn something. So friends, the market went up from 17 Jan up to here, came down, went up again and came down. Now, there is a trend line that is there. And if you see that trend line, friends, I'll draw it in front of you. From here up to here. I'll just quickly align the trend line. So friends, if you see, this is a long-term trend line. And he must have drawn this trend line and then understood that the market will stop at this level of 16,426, 429. So because it took a support here, took a support here, took a support here, took a support, and then actually took a support here. Now, if you go back to a 5-minute chart and see, it exactly touches this line. That's the beauty of my Guruji. Thank you so much. So friends, we have reached now. Before that, friends, I would also want to do some more analysis before I come to any conclusion. Now, there's a movement that happened from 29th August till the 15th of September. 29th August, the market the low was 17,166 and the high was 18,096. So friends, I have plotted this. Okay, these are my analysis. So let's not get into that. I keep on doing analysis, and there what I see is that the retailers have now become bearish. They have reduced 33% of their positions. The pros have reduced half of their bearish position by 56%. The FIs have also reduced 22%. So basically what's happening is that the retailers are becoming bearish and the smart one is becoming bullish. Okay. Now, having said that, friends, on 29th of August, the market low was at 17,166. The high of 15th of September was 18,096. So that's a movement of 930 points. The low of today is 17,429, which is 667. And that is 71.2% retracement from the 930 points. And the close was at 50.97, which is 474 points. Now, friends, all of you would have heard of Fibonacci levels: 100, 78.661.8, 50 to 38.223 and 0. And on the reverse side, 100, 76, 61, 50, 38, 21. So when it comes down like this. When it goes up like this. So friends, it has retraced up to 71. So it has retraced up to here. And then from there, it went back here. So it has, the market, what is it done when it has closed? It has crossed the 50% Fibonacci level. And therefore, that's a bullish sign in the market. So the next level can be what? The 38.2% retracement, which is 335 points from this. And that level is 17,741. 17,741. Now, very interesting level. And the level 2 can be 21.4%, which is 17,897. So friends, let's get back to our chart. And I will extend this chart more here. Let me see if I've drawn the chart so that it exactly matches the 5-minute candle. No, I have not drawn it properly. So let me draw it once more time properly, a little bit of a change. Just give me a minute so that I can give you the right understanding. And it is should be here. Yeah. Yes, a little bit more on the downward side. So just bear with me a little bit more on the downward side. One day, maybe one day. That should be the right thing. So friends, now this is a triangle that is getting formed, which means that if you see, whenever the market has taken a support from this trend line, it has gone up, touched the trend line, gone up, again touch the trend line. So I'm expecting that the market will go up, touch the trend line, go up, touch the trend line, go up. Now at any point of time, if this trend line is, I'll keep this trend line drawn. I'll not remove this trend line. I'll keep it drawn. I'll remove all the other lines, but I'll keep this trend line drawn. At any point of time, if the trend line breaks, then we'll see a substantial downfall. But till the time the trend line is protected, the market will move in this particular triangle up to the 14th of October. Now, friends, how do I capitalize on this learning of mine? This is a learning that the market is going to move in this triangle till the time it breaks. So there are two ways of doing it. One is I buy calls, and second is I buy future, and to reduce margin, I buy puts. So what I shall do is, from tomorrow, I'm going to buy a future, and to reduce the margin, I'm going to buy some puts for it. That's my strategy. So that I capture this whole movement. And at any point, even tomorrow, if the market comes down below this, I'll still not be in losses, I'll still be in profits. So at any point from this strategy of my mind of buying future and hedging it with puts will not give me a loss. Okay. Now, so all of you would be interested in what's going to happen tomorrow. Let's see what's going to happen tomorrow. And for that, I go to a 5-minute candle. Now, friends, I will again revert back to my mathematics, which is my level of 17,741. Now I shall draw this level of 17,741. 17,741. Now that's the level, I'll keep it drawn. Now, very clear, friends, tomorrow, so this trend line, this will need a little bit more of an adjustment. And to do this adjustment, I have to do something more, which is, just give me a minute. Just give me a minute. I think just give me a minute so that we can do the exact adjustment of this. And that is I'll remove this particular line so that I can see that the candle here. So that's my candle drawn here. So more or less it is there. So friends, what I shall do is that this is a very long strategy now. If tomorrow, friends, if the market breaks this particular 17,741 and goes up, then I shall sit on a call. And what shall be my level? It is 17,897. And my next level is 17,897. Okay. So if it breaks 17,741, I shall sit on a call up to 17,897. Now, there is also a particular resistance point which it has created, the market on its own has created. So when shall I sit for it? The market has created this particular point of resistance, and that is 17,667. So say, for example, the market opens flat, crosses this, you can take a call up to here, 17,741. And if it crosses 17,741, you can wait for it to go up way up to 17,897. Okay, this is one scenario. Second scenario is that, so today the whole day, the market stayed in this range. So that means accumulation of the big players has happened in this range. So I will draw this line again. And this is the range that I will draw, which is 17,578. Let me see. 17,580. Okay, 17,580. Now, if the market opens below 17,580 or opens flat and breaks this, I can expect it to come down up to this trend line, and then from there it will take a support. Okay. So you can sit on a put, but this is a very small target to take, but you can take that target. At any point of time, whichever place, if the market opens flat in between this, whichever place you take the trade, that is, if you're taking a trade on the upside, then this becomes your, if you're taking a trade after this break of 17,667, then this 17,667 becomes your SL. Okay. And if you're going down, if the market is coming down, then the 17,580 would become the SL up to here. Friends, this is a very long-term trend line. Please respect this trend line. Okay. If it breaks this, if it breaks the trend line and closes below this on a 15-minute candle, bindas take a put. Bindas take a put. But I'm not expecting it to. What I'm expecting is the market will open somewhere around in between this 17,667 and 17,741. Expecting the market to open in between this and break it and go up. This is what my expectation is. But today my market did not work as per my expectation. Tomorrow also it may not work. But this is what I'm expecting. So that's all from my side, friends. If you like my video, please like it, share it, and subscribe it. Thank you very much. Sayonara. Cheers. Bye-bye.